Hello and welcome to our webcast. Moss Adams is pleased that you joined us for today's webcast, Create Effective Finance, Investment, and Audit Committees. Before we begin, I'm going to play a brief video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And now I would like to introduce today's presenters, Anita, Shah, partner, and Tammy, Lohr, Schweitzer, and Chelsea, Ritchie, directors here at Moss Adams. Their bios and contact information are located in your console if you would like more information. Now I would like to turn the floor over to Chelsea to get the presentation started. Chelsea?
Thank you so much, Danielle, and welcome everybody. We're so excited that you are here today. This is our 4th webcast of our Building Better Board series. If you haven't had a chance, I would really encourage you to look at the other 3 webcasts that have already been aired, and those are available online. And then December 3rd, we're also going to have a panel talking about board resilience really through that DEI lens. So really encourage you to join us again on December 3rd for that panel. But without further ado, let's get going on creative, effective finance, investment, and audit committees. After this webcast, we hope that there will be 4 key takeaways that you'll get from this. So number 1, that you'll be able to understand those key roles and responsibilities for finance, investment, and audit committees. Second, that you'll be able to describe the relationship between those 3 committees and the other key stakeholders that are involved in the working pieces of those committees. Third, we want to consider best practices for meeting and decision-making within those committees. And then lastly, we're going to talk about some key performance indicators and how those will really help demonstrate resources, what resources are being used and when organizational goals and objectives have been met. But let's go into that first polling question, get the first one out of the way. So we would like to know, what is your role in your organization? Are you a board member, a committee member, CEO, executive director, management, staff, or other? And just as a reminder to respond, please click the button next to the answer and choose to hit submit. If you can't see the submit button, please enlarge the slide area. really important. I think all of these different key stakeholders, this is a great class for everybody, really to help provide some actionable insights that hopefully you can take, further with your organization. Wonderful. We're all over the place. It looks like the majority are management. So welcome. Really excited to have you here today. All right. And with that, I'm going to pass it off to Anita.
Thank you, Chelsea. Hello, everyone. So I'll start out with talking about the roles and responsibilities of the Finance, Audit, and Investment Committees. So jumping right into it, on the Finance Committee, so starting with the framework, ensuring that your Finance Committee, when you're setting this up, ensuring that they have a good set of goals that they're working towards. Establish your charter and your goals for that committee. And then the individuals that make up that committee should really be coming from various different cross sections to make sure that you're not just getting everyone with the same background and same thought process, ensuring that everyone, you're bringing those different characteristics, diversity in thoughts, basically characteristics when the committee is established, and then setting a cadence for the committee to ensure that they know that they're supposed to be meeting certain times of the year, however many times in the year, to ensure that they can actually meet those goals that are established for them. And then defining their responsibilities. There are many times that individuals are selected for committees that maybe is not very clear to them as to what their responsibility is. So having those responsibilities listed out is really important. For a finance committee, ensuring that they understand that they're in charge of reviewing and approving your organization's budget, how money is spent, and tracking how money is made too, to make sure that that's the primary responsibility, I'd say, for a finance committee, because ultimately, being a CPA myself, I have a little bit of a bias here, but I truly believe a finance department is the backbone of any organization. So however strong your finance department is how strong your organization will be. And the finance committee is in charge of ensuring that the department is properly established, ensuring that the finance department has enough resources to help them out. They have established strong controls, and their financial state systems are appropriate to ensure that they can perform their financial functions appropriately. And there should also be a monetary policy and a financial policy for your organization to ensure that they are, the finance committee oversees that policy and those policies are being tracked, and your finance department has something to has that background to work towards. Ultimately, the finance committee is part of the committee that will report to your governing body that is in charge of your organization's reputation. So much is dependent on how those finances are being tracked that is part of the finance committee's committee's responsibility of ensuring, or considering your organization's reputational risk. Also, depending on how your organization has set up your investment committee, there are times where an investment committee may report to the finance committee, or sometimes the investment committee is separate. And I'll talk about the investment committee in a little bit. And then they're also in charge of approving who the custodians are for cash and investment authorities at your organization. Any good committee, the best way to ensure that they are following the goals and meeting the objectives of the committee is to ensure that there's an evaluation process. So ensure that the performance and participation of all committee members are properly evaluated, that goals are being accomplished, and regularly do a gap analysis to evaluate if there are any gaps in the responsibilities of the committees or in the policies that are being followed. And then most importantly, for succession planning, ensure that you have a pipeline established for your finance committee, for all of these three committees that I'll be talking about, so that you have younger leaders that are in place. They can shadow certain committee members as some committee members are rolling off. So you have a strong pipeline, establishing a strong pipeline early on. For an audit committee, let's similar idea of ensuring you're establishing a charter and goals for the audit committee, and the committee is made up of various different individuals that have diversity and thoughts from different cross functions. I would highly recommend that your audit committee has at least a financial expert or a CPA on the committee. And then again, establishing those cadence of meetings for them. The audit committee's primary responsibilities do entail evaluating your external auditors, recommending them to the governing body. The audit committee should also evaluate the audit familiarity risk and evaluate who the audit partner is, consider audit firm rotation or audit partner rotation. For whether they're my clients or whether they're Moss Adams clients or not, we highly recommend, what my thought process is on audit rotation or auditor rotation is that every 5 years, you do not have to change your auditors, but I highly recommend every 5 years, at least go out and evaluate, get proposals from other firms, see if the service that you're receiving is in line with what's out there, if the fees are in line with that, if the audit firms have kept up with new technology and all audit standards and their specialties, who the audit partners are, what their specialties are. So it's not a bad idea. Changing audit firms is always a hassle for management. There are a lot of members of management on this call that would probably agree with that. But it's also a good idea for your own organization to just evaluate whether you have the best audit firm in place for your organization. Reviewing auditors' fees and scope, evaluating the audit results, audit findings. If there are audit findings, ensure that corrective action plans are taken and properly implemented. Reviewing any management letter, comments, best practices that are provided by auditors. And then audit committee at a higher level should also be evaluating the enterprise risk of your organization, evaluate if risks are being properly addressed and if there are plans to mitigate those risks. Evaluate your control environment, any sort of legal, regulatory compliance risks. Those are a laundry list of responsibilities for the audit committee, but I don't often see proper evaluations done on audit committees on a regular basis, but it's also a good idea to perform those similar to finance committee and investment committee. Do that evaluation to see if your audit committee's members are participating and they're performing their objectives in a proper manner. Perform even self-evaluations for committees, because these committee members should be very, very self-aware of what they're providing to their organization and how they're evaluating, or how they're being evaluated. Ensure that the audit committee is meeting their goals. Again, analyze if there are any gaps in the committee's responsibilities or in the policies that are being followed by the organization. And similar to the finance committee, evaluate your committee's pipeline, ensure that you have youth in place. And I say youth only because in the service line that I work for, my clients are primarily with Native American tribal governments, and I highly recommend having tribal youth in your pipeline to ensure that you're providing those opportunities for people to shadow current committee members. And then your investment committee. Similar to the previous two, establish that charter, establish your goals for what the investment committee is supposed to oversee. Select members who would have good investment backgrounds, or even those that may not have much of that investment background, but who curious committee members, right, who will ask good questions, and set up cadence for those meetings. For an investment committee, their primary responsibility is to ensure that the investment policy for your organization has been properly established and it's being reviewed on an annual basis to ensure your investment policy, is in line with what the organization's direction. Ensuring that your management is following your investment policy. The investments that they're entering into are those following under the investment policy, ensuring that you're managing the entity risk and the organization's reputation as well. This has been several years now, 15 years ago maybe, But it was pretty embarrassing with one of our clients had found out that they had millions of dollars in Bernie Madoff investments, and that wasn't something that their stakeholders were excited to hear about, because they didn't know. They wanted to know who was responsible for overseeing the investments, who's truly ensuring that the investments are following the organization's investment policy risk. Similar to the other two committees, ensuring that you're performing an evaluation of the committee members, goals are being met, and analyze any gaps in between your investment policy. As your organization changes, you may have changes to your goals of how you want to have your investments. So continuing to evaluate that investment policy on an annual basis is a good idea, and set up a committee pipeline for future generations. So just standard practices for all of these committees. The biggest piece I would say is defining those roles and responsibilities, making sure that the committee has not only an idea of what their responsibilities are, but they also have the authority, and they understand their scope of work of what they're supposed to be doing in each of these committees. Ensuring that the committee has adequate information that's being provided to them so that they can make proper decisions. Making sure that you have including members with relevant expertise, whether it's financial, accounting, investments, auditing background, public sector expertise, bringing in diverse perspectives and knowledge. Provide continuous education and training to your members as well to keep up with accounting standards, audit practices, regulatory changes. There are so many changes that are happening so frequently that we want to make sure that your committee members also have the proper education and proper continuous education on these items. And ultimately, these committees should be ensuring that they're identifying financial and enterprise risk, and they're ensuring that there are plans made by management, approved by governing body, to monitor these risks and address how to mitigate these risks. All of these committee members, for all three of these committees, we want to make sure that they also have no conflicts of interest when they are ensuring that the committees are acting without any bias when they're making key decisions. Any conflict of interest that could influence their own decision-making process would impair the organization's would impair the committee's effectiveness. And then open reporting, ensuring that you have transparency in reporting so that how financial decisions are being made, processes are followed, outcomes are evaluated. Ensuring that the committee has this information and they can provide that to stakeholders is important. Speaking of stakeholders, well, before I talk about stakeholders, all three of these committees also there's a lot of overlap between all of these committees. All three of these committees should ensure that the goals are aligned with the organization's overall mission and values. The financial state and reporting also is impacted by all three of these committees' decisions. Audit findings, resolutions, they could be affected in the finance or audit committees, but can also affect the investment committee as well, the decisions that are made by them. And risk management is a responsibility for all three of these committees to ensure not only reputation risk, but a lot of the financial risk and regulatory non-compliance risk that affects organizations. And ultimately, accountability for all of these committee members needs to be monitored on a regular basis to ensure that your committees are providing the most effective outcomes for your organization. And then all three of these committees also have different stakeholder relationships, with governing body being the primary one that they're reporting to. But they all have different, I won't list out every one of these here, you can read them here, but each of these committees have different stakeholders that they have to be thinking about, keeping in mind when they are making decisions, when they are considering different actions. There are community stakeholders, there are third-party regulatory bodies, there are external auditors, government agencies, employees, other legal advisors. All of these three committees need to be considering all of these different stakeholders as they're making decisions. Again, another reason why conflict of interest is a really important part of evaluating your committee's best practices, because these stakeholders is what they should be keeping in mind, and the missions for and the goals for each of these committees as decisions are being made. So I guess we're next on to our second polling question. Which of the following areas reflect an intersection of finance, audits, and investment committees? Internal controls, fraud risk, audit findings, all of the above, or I'm not sure.
And there have been some really great questions in the Q&A around, well, what if we're a smaller organization and we don't have the ability to have a finance, audit, and investment committee? Our board members will just be overwhelmed. And I think that's a great question. And I think we've all seen a lot of different variations of it. And it depends on what your organization type really is. So for example, when I'm working with local government, we often see a finance and audit committee that might be potentially combined. However, when I'm working with higher education institutions, especially if it's a private institution where they have their endowment or something like that, then I always see a standalone investment committee. And so I think that it really does depend on sort of what are the funding sources for your organization and what are the risks within your specific industry. But I was curious with Anita and Chelsea if you have any other sort of ideas to share on that question of, what do we do if we don't have the bandwidth to have 3 separate committees?
Yeah, we see this often, but as you're saying, Tammy, there are other ways for, even if these committees are not established, there are other ways for an organization to ensure that these goals and responsibilities are followed by different individual members of management or different individuals of the organization, to ensure, even if it's not a committee of 6 people, it's maybe certain individuals that are responsible for this, but then there's proper monitoring over those individuals, and there's proper reporting for them to the governing body, because ultimately the governing body are the ones making the decisions. In line with that, there was another question in the Q&A from the audience about what do you do about these committees when the board member, you have no control over the board members themselves having certain amount of the expertise, right? Because board members are elected, they don't necessarily always have the expertise that we would expect from a finance, audit, or investment committee. But the idea behind these committees is to help governing board members make these decisions by providing them appropriate information by individuals who have the proper expertise. So members of management can provide this too, but ensuring that they're providing everything that they need to provide to the proper information they need to provide to governing body to make those decisions will be important. All right, all of the above. I agree with that answer. And I'll turn this over to Tammy now to talk about meetings and decision making.
Perfect. Okay, so we're going to go ahead and review some best practices in committee meetings and decision making. I'm sure that some of this is just a refresher for many of you, but I think it's always good to have a refresher every once in a while for some of these meeting logistics. So let's just start out by how do we set up a really good meeting? So the first piece is to make sure that we have really clear objectives and an agenda. So before the meeting, define the purpose of the meeting, the objectives of the meeting. What are we here to talk about? Do we have to make any decisions today? Let's make sure all of those pieces are really clear up front so that everyone knows what to anticipate. This is something that I know many of you do in order to comply with public meeting laws, but it's also just a really great reminder if you are an organization that is not subject to public meeting laws and you have a little bit more flexibility in sort of where your agenda meetings may take you. You should also always start and end on time. You want to respect everyone's time in the room. That will help make sure that you are staying on task, you're productive, and that all of the agenda items can hopefully be covered. This can be hard for a lot of the Finance and Audit Committee committees that I personally work with. So during discussion, if you have a specific agenda item, try to assign a specific time for that item. Otherwise, you might find that you only got through 2 out of your 5 items at the end of the meeting. And then some committees don't necessarily have an end time. So I have been blessed enough to be in audit committee meetings that end at midnight or later before. And realistically, that's just not very productive for your committee members, for members of the public who might be wanting to sort of engage with the committee. And so being able to sort of set some parameters around how much time are we going to spend on each topic, rather than letting that really languish, can be a really good way to have an effective meeting. You also still want to be able to create an environment that really does encourage all members to be able to participate in that discussion, especially if there are differing opinions, perspectives, and ideas. You can do that by helping encourage the use of inclusive language and really being receptive to different perspectives that are being shared, and making sure that it doesn't get into, we're starting to talk about this, and then we have suddenly gone off on a tangent, and we're not actually talking about that specific issue anymore. So sometimes with more participation, you can have some of those veering conversations and just having someone say, okay, let's bring us back on track for this particular item. If you do have committee members that tend to sort of veer off into other forays that might not be agendized, we like this idea of allowing for mission moments. So opportunities for your committee members to really connect back with the mission, root the work of the committee and the mission of the organization, and really let that resonate through the discussion. And that can be a really effective tool if you find that the group is struggling to make a decision. So bring them back to, what are we here to achieve? What is our organization's purpose and mission? And consider this choice from that lens in both the short and the long term. And that can help sort of create additional decision-making capacity, which we will also talk about today. So then moving down into the second row, you can establish meeting agreements to make sure that there are shared norms around behavior and expectations. We'll talk more about that on the next slide, so I won't go into it in too much detail here. We also will talk about how to use technology effectively. I know a lot of our clients during the pandemic went to fully remote meetings, and now we have sort of a smattering of clients that are doing fully in person, or they might be doing hybrid meetings. And so there are different technology resources and needs for each type of those meetings. And so we'll talk through some of the best practices there as well. Establish roles and responsibilities is next. I know Anita had really just covered that, and it's also been a big topic for some of our other webcasts in this Building Better Board series. But again, it's just very important to have those really clearly defined roles and responsibilities for each of your board members during the meeting. And that includes not only what is your role as a committee member, but also in this meeting, do we want you to be taking minutes? Do we want you to be facilitating the discussion, to be keeping track of time? You can assign some more of those logistics pieces that are here on the slide to be able to create more effective meetings. You also want to, at the end of the meeting, summarize all the key decisions and action items that were discussed, assign responsibility for each of those action items, as well as a deadline for completion, and really carry those action items forward into your next meeting agenda. That helps create that sense of, we were all in this room together and we're all leaving with the same understanding of what was discussed and what was decided upon. I know that many times we can often have very robust discussions in some of these committee meetings, and then everyone might leave with a different understanding of what the key takeaways were. So having that sort of debrief at the end and saying, this is what we covered, or having the meeting minutes be able to reflect that if you're a public agency, it's a really great tool to just make sure that there's clarity on all of those components. Evaluate and improve. So regularly look at the effectiveness of your committee meetings, get feedback from your committee members, and then use that to be able to improve upon your meeting logistics and practices. And then the last box here is to maintain confidentiality and really making sure that committee members understand that sensitive information that's discussed in these meetings has to be confidential. This is often within your bylaws, it's within your committee charter, or even state law like the Brown Act within California. And confidentiality violations can have a lot of consequences for organizations. And so making sure that all of your elected officials, your board members, and your committee members really understand this concept of maintaining confidentiality is going to be really key to having productive discussions, especially if there is a sensitive topic that's on the agenda and you might be in closed session. So let's talk about sample meeting agreements. So meeting agreements are another great way to just make sure that committee members have a common understanding of expected behaviors, those expectations, and the protocols during meetings. When you have those shared expectations, it can help promote more effective communication, mutual respect, as well as productive discussion. If you already have meeting norms, then just throw them up at the beginning of the meeting and say, okay, just remember that these are the meeting norms that we've all agreed upon, and just make sure that you're having that sort of check-in at the beginning of a meeting. Or you could even assign someone to make sure that people are adhering to those meeting agreements within that sort of roles and responsibilities piece if it's something that's a little bit new to your committee. So we have included some sample meeting agreements for you to consider and potentially use here. The first couple really relate to being present in the meeting, making sure that individuals can really stay engaged, they can actively listen to what others are saying, and they can limit multitasking. Multitasking, especially in a hybrid meeting, can be so very tempting. So especially since many of your board members and your committee members are really volunteer, they might be, still having a full list of emails to be able to get through once they're done with the meeting for their day job. But really, when you have a lot of multitasking, it can actually create inefficiencies. It certainly contributes to misunderstandings in that sense of, well, we all took something different away from this meeting. And research does, in fact, show that we cannot effectively multitask, even though we all tell ourselves that we can do it and we can do it really well all the time. Research says otherwise. So try to make sure that everyone has the ability to unplug for the hour or two of your meeting so they can really be present. And that's another reason to make sure that you're starting and you're ending your meetings on time and that you're using that time really wisely. Because if you have a 6-hour audit committee meeting, it's very hard for someone to be able to dedicate the full 6 hours without multitasking, right? So that goes with the next area, which is staying on topic, focus on the issue at hand rather than sort of getting distracted with other ideas or going off on tangents. Again, if you do that, you're more likely to spend additional time talking about something else, and that might not be agendized. And then at the end of the meeting, you find out that that first agenda item wasn't necessarily resolved, or that you were there for 6 or more hours. So stay on topic, and don't be afraid to put other things that come up in the parking lot and save them for a later meeting. And then the next sort of 4 meeting agreements that are here are really about approach, tone, inclusivity, and really demonstrating leadership among your committee members. So encourage all those members to contribute to discussion, make sure that you have diverse perspectives that are really actively solicited before you're making a decision. That might mean that louder folks on your committee may need to take a step back. They may need to stop and listen and be a little bit quieter, while those quieter people may need to sort of chime in a little bit more and know that their contributions are really welcome. And this is, again, made easier if your committee uses inclusive language. You can assume positive intent and also make sure that everyone is really respecting and supporting the decision that's made by the majority. So your role, as a lot of management was on this webcast, it could be to sort of work with the committee members to make sure that we are using inclusive language and that we do have the opportunity for everyone to be able to participate and provide input into decisions. Okay, so hybrid meeting considerations. Another factor to having really effective committee meetings is just how are we going to host those meetings? As we continue to adapt to the evolving work environment, we've seen a number of our clients really permanently adopt a hybrid board meetings to be able to promote full participation. It's a little bit easier to fit it into everyone's busy schedules, especially if you have board members that are all over the nation or all over the world or even all over the state. It can make it a little bit easier for everyone to be able to gather and connect. However, your hybrid meetings can certainly create some challenges to maintain engagement and inclusivity. So these are some of the best practices that we've seen our clients use to have really effective hybrid meetings. So first, just test your technology in advance. Make sure everything's up and running, everything's going well. We've all been in that meeting that was delayed 5, 10, 15 minutes because of a technological issue. And really just joining, 3 to 5 minutes in advance can just to make sure that everything is running, you can hear, you can see one another. It can really help make sure that you can start and end those meetings on time. So if you have people who are in person and online, make sure that the audio and visual is working for both of those spaces. If you do have one of those conference room systems, and sort of go around and make sure that you have the microphones strategically placed based on where folks will be sitting so that those who are participating remotely can really hear really well. If your in-person folks tend to have a lot of side conversations, it would be a great meeting agreement to say, let's not have those side conversations. I don't know if any of you have been on a meeting where you've been the person remote and everyone else is in a conference room and then there's some side conversations and you hear that side conversation, but you can't hear the larger conversation or they all mix together. So if you do need to have smaller group discussions, just use those breakout rooms because otherwise it's really hard as someone who's participating remotely to really engage in that discussion because it's hard to sort of hear what's going on. The role of a facilitator can also be really helpful for hybrid meetings. It's always important in any of your committee meetings, but it's even more important if you do have people who are participating in person and virtually. Some boards will have the chair facilitate the meeting, or they may even appoint staff to be able to help facilitate. And what I mean by that is sort of paying attention to, okay, someone on the screen has their hand raised. Let's make sure that the board chair is active in that discussion in person, but we've got a couple people online. Who's making sure that they're also getting the opportunity to provide input and engagement? So having someone be designated to be able to monitor that can be really helpful. So again, hybrid meetings, great tools. They allow for greater diversity in your committee members. Their success, however, is really dependent on your commitment to creating these really inclusive and effective environments for all of your meeting participants. Okay, so let's talk about decision-making. So effective decision-making in committees is really critical to guide your organization's strategic direction. And these are some of the ways that we have worked with committees to really help build that capacity up, working with our clients, particularly in the public sector. So starting on the left-hand side, each member of your board or your committee presumably has some level of influence, some ability to really shape the direction and the outcome of discussions, even if it's not formally granted through something like being a chair or vice chair. That influence often arises through relationships that are internal to the organization or external to the organization, their expertise, their communication style. And so we just want to be able to really allow members to constructively use their influence and really focus on the best interests of the organization while foregoing any personal agendas. Moving up, information needs. Your decision-making abilities are only as good as the information that is used to help inform them. So making sure that you have access to accurate and timely and relevant information in advance of the meetings so that your committee members can really review that information, they can process it, they can really show up to the meeting ready to have an engaged discussion. So again, they should be reviewing that information in advance, and your role as staff and management is to break that information down so that it's not them receiving 400 pages every quarter of materials that they have to review. So thinking through making sure that we have the right information available. The next is sort of that group identity. So creating that cohesive group identity to help foster trust and collaboration. It makes it a lot easier to navigate those more difficult decisions. You can really help reinforce that by, again, thinking through the roles and responsibilities of the committee, the broader organizational mission, and then again, focusing on those inclusive practices so that everyone feels really valued and included. Having good group identity does not mean that you will be able to fully avoid conflict. So also considering each committee member's conflict style. What is that style? How does it manifest? And how do we have agreements around how we will actually be able to manage that conflict can help create that decision-making capacity. Some conflict is good for decision-making, but it has to be really constructive. And then finally, thinking through the individual concerns, the individual backgrounds of your committee members, what's really top of mind for them in the way that they're showing up for your organization can help fold into how do we work together to be able to increase our decision-making capacity as a committee. So again, this is really a holistic approach. It addresses not only the technical aspects of decision-making, but also the human dynamics that really influence how are decisions made in the real world. And so these are just some of the tools that we've seen be really effective to help develop this capacity in your finance, investment, and audit committees. So with that, I'll pass it over to Chelsea to talk about reporting.
Thank you, Tammy. This has all been great information and really leads us up to what are the key tools that these committees need to utilize to really make sure that they're following through with the organization's purpose and mission. So I think it's really good just to talk about what are financial reporting objectives. So these are really the goals that the organization is aiming to achieve through its financial reporting process. This is what the committees need to focus on throughout their work. And really, these objectives are going to be, as Anita said, the backbone or really the keys for stakeholders to understand and be able to have those relevant, reliable, and timely information needed to make key decisions within the organization. So really, thinking about key reporting objectives, what should these include? Number one, I think transparency, really being able to provide clear and understandable financial information to all of those key stakeholders so that everyone understands the organization's financial health as well as performance at a given time. They need to be accurate, so making sure that financial statements are free from material misstatements, errors, omissions, thereby reflecting the true financial position of that organization. Another one that I like to bring up when thinking about financial reporting objectives is that consistency. So making sure that you're applying consistent accounting principles and practices over time. This really helps allow stakeholders to compare financials historically through time and make those key decisions that are needed. And then, lastly, another one I thought that I really wanted to bring up in this area is accountability. So you really want to make sure that you're providing and holding management also accountable for those organizations' financial performance, as well as the stewardship of resources such as assets. That is the main goal of these committees. It's really to help support management in those decisions, as well as communicate information that's needed to the board as a whole. So talking about the financial reporting objectives, let's talk about how we get there. So those are through our financial statements, and really financial statements, are so critical in communicating a variety of important information about an organization's financial, performance, as well as their position and cash flows. So a couple of key concepts that we can really take away from this graphic. So the amount of time and nature of an organization's assets, liabilities, and net assets. For example, looking at a balance sheet, what percentage of our assets are cash versus AR, so accounts receivable, and what percentage of AR has historically been written off. Those will help us make key decisions, if we need to buy some fixed assets in the future, or are looking at additional investments in the future. Going down, looking at transaction events and circumstances. What are those circumstances that affect net assets? Looking at the timing of when those transactions usually occur in our month-to-month or year-to-year basis will be really important in this area. And going down to inflows and outflows of economic resources, understanding, what historically goes in and out will also help make, those key decisions a lot easier for us, as well as liquidity. So how are we able to meet our short and long-term debt obligations? How easily are we able to pay our bills? These are questions that these financial statements will really help us, visually see. And then, last but not least, the service effort. So thinking about your organization, where are we spending our time and our money allocations? And the financial statements will really help visualize and make sure, that we are on the right track to making sure that, are we spending too much money on personnel costs or supplies, or do we need to spend more money on marketing? So those decisions can be easily made through our financial statements. So polling question number 3, here we go. Do you think your organization's financial reports are useful? So very useful, mostly useful, not useful, or financial statements? Do we have those? Hopefully no one answers with a D. All right, looks like we have about 30 more seconds for this one. Make sure to get your answer in. Okay, well, oh, there we go. Thank you, Danielle. So it looks like mostly useful or very useful, which is great information. I'm really glad to hear that. And hopefully after we talk about some more of these key performance indicators, you will be able to, have even more useful financials. And I think it's important to remember that there are so many different users for your financial statements. And this will really flex what you are showing or providing to different users. I think probably mostly for this group, we're going to be looking at management. So management needs to make those key decisions. Board members, maybe potential owners, if that is the type of organization that you fall under, or federal and regulatory agencies. So all very important. And I think it's important because, like I mentioned, you can be very flexible in tailoring your financial statements that fit your users' needs. What are they looking for? What's important to those users? What information would be most helpful for them? For example, are they used to monitor cash flows? Are they, we need to use our financials to help secure more debt or evaluate the collections or write-offs that, our organization is currently, seeing throughout and stuff like that. And really making sure if they meet or we can present things differently based on the different users is so important in this category. Just a refresher before we go into those KPIs, those key performance indicators. These are the main tools of our financial statement analysis. So, depending on the different types of users, you might be presenting a balance sheet, an income statement, a cash flow statement, or your overall annual statement. These are really important. We would probably expect that your finance committee, as well as your audit committee, they're getting their hands on all 4 of these different types of tools, at least quarterly, if not more. And then, depending and flexing on what the board is going to get or the investment committee is also going to get. All right, so let's go into those measuring financial performance with those different tools, such as balance sheets or income statements. So first and foremost, what is a key performance indicator? So a key performance indicator, also known as a KPI, this is really a measurable value that just demonstrates how effectively an organization is achieving its key business objectives. So KPIs are used by organizations really to help evaluate the success at reaching targets and really help making a guide to that decision-making process. And they really can be used at various levels, within an organization. So from your high-level strategic talks to very specific or measurable operational metrics, these are really great to also bring to those committees. They give a quick response for a committee member or a board member to know exactly what is going on with the health of the organization. So what are good elements of a KPI? So really effective characteristics that you want to make sure that you're seeing in your KPIs. You want to make sure that they're very specific, so clearly defined and focused on a particular area of performance. Making sure that they're measurable. So a quantifiable, allow for easy tracking and assessment of progress. This will make it easy for committee members to really, pinpoint where we are in our goals. Also, make sure that they're achievable, right? We want to make sure that they're realistic. Are they attainable for our organization? Consider those resources and constraints of the organization. That will be key to make sure that they're actually relevant and that they're aligned with the organization's goals as well as objectives, and making sure that they also have those meaningful insights, really important. And then the last one I would like to, really harp on is making sure that there's a specific time frame in those KPIs. That really makes it easy for allowable and timely evaluation of performance, and is also a great expectation that you can give to your committee members so that they know, progress and how to pinpoint that progress in the future. All right. So other things to think about here, performance measurement, good characteristics of KPIs. They're going to have a clear framework for measuring those performance against those strategic goals that we talked about earlier. They're also going to be really make you have data-driven decisions, which is so key to really show that you are improving your processes and outcomes to your committee members as well as board members. And they give you accountability. They help establish accountability with teams as well as departments, and they provide clear targets to aim for. And then they also, like I mentioned before, are really giving you that continuous improvement. If you regularly are reviewing those KPIs with management as well as your committee members, this really encourages a culture of continuous improvement, and that can help also identify areas for enhancement or improvement down the future. So really, these are great tools for organizations to monitor their performance, make sure that they're aligning with those strategies, and overall drive that improvement across various departments of the organization. So quickly, I wanted to go over a couple of core KPIs that we wanted to make sure and highlight. Obviously there could be a whole webcast just on KPIs and the key important ones to look at. But one right here to highlight would probably be the net income ratio. So the net income ratio is a net profit margin. It really helps measure the percentage of revenue that remains after profit and all those expenses are taken away, taxes and all of that. So it really helps promote that profitability and operational efficiency. And so there, as you can see, there's different ways that we can illustrate that. So looking at operating performance or looking at the surplus or deficit that our organization is creating. And also some best practice KPIs. I can tell you from sitting on multiple finance and audit committees in my career, that these are ones that I look at a continuous basis. So current ratio, that's really looking at the financial ability of a company to make sure that they are paying for their short-term liabilities with their short-term assets. It's also an important indicator of liquidity and financial health, as well as making sure that stakeholders assess whether the company has enough resources to cover all of its immediate obligations. Really good KPIs to look at, and ratios that can really help an organization make sure that they are successful. I know those were quick. We will be sharing those slides with you all afterwards, but I do want to get to the final polling question, and that would be, what KPI would be most beneficial to your respective committees to pay attention to? And I guess I would open up the floor. Tammy and Anita, quickly, is there one that you guys really think highly of?
Not sure that it's just one, because one ratio only tells you one thing. So I think that picking a suite of, between 4 and 8 different ratios and sort of being able to present those on a quarterly basis to your finance committee and say, look, here's our target. This is where we've been at, and this is where we are right now. As well as a little explanation of like, what does that actually mean, in case you do need to provide that additional education. That's going to give you a better lens than really just focusing on one ratio, which I realize is an option on the poll. But Anita, what do you think?
I agree. Each one of these has its own importance, and every committee does have its own goals too that they need to focus on. So I can't imagine just one or two being individually most beneficial, because there's so many different things that each of these committees are responsible for ensuring that their objectives are met, that I can't pick one or two.
All right, it looks like we're almost there. Danielle, do you want to jump in?
Yeah, we've got a few folks having some issues seeing the polling question. These do show up directly in the slide deck. So if you have minimized the slides to just watch our presenters, please make sure that you have those open. You can utilize the slide widget towards the bottom of your screen, or try refreshing, and that will help pop up the poll. We'll leave it for another 20 seconds or so to catch those folks that are having some issues.
Wonderful. Thanks, Danielle. All right. Well, Danielle, do you want to take us home from here?
Absolutely. Thank you, Anita, Chelsea, and Tammy for a great presentation today. To our audience, if you have any further questions or comments, please reach out to us as we would be happy to continue the conversation. You can drop a note in the Q&A window or reach out to our presenters directly. Their contact information is in your console. For those of you that were having trouble with that last poll, do keep in mind if you answered 3 of the 4 polling questions and were on for 50 minutes of our presentation, you should still qualify for the CPE credits. If you were unable to attend some of the previous webcasts in our series, I'd like to highlight the image in the upper right-hand corner of your console. Here you will find curated content from our professionals specifically tailored for board members, management teams, and committees. Recordings are available for your convenience. If you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 3 weeks should you have any difficulty downloading it now. And finally, here's a link to the online survey for today's presentation. Thank you for joining our webcast, and we hope you will join us again next time. Thank you, everybody.